Good morning, everyone. Thanks so much for showing up after the wild night yesterday, no doubt. I'm here to talk about why you should invest in Bitcoin today. First, a little bit about myself. I'm author of a financial newsletter. It goes out to 1,500 investors in Belgium and the Netherlands. And the reason or my way towards the newsletter started when I started feeling uneasy about insolvency everywhere around me, and I didn't quite know what to do about it as a saver, as an entrepreneur, as an investor. I didn't know how to respond to this, so that's how I started writing and researching, and that turned into the newsletter. And my approach is that for the theory, I use Austrian school economics. I like to read a lot of history to see if there's patterns that happened in the past that I can recognize today to help me see what's ahead. And then also I think that if you want to acquire practical knowledge, and investing is all about everyday practical decisions, I think it's not enough just to read and read on the internet and then synthesize and write about what your thoughts are. I think it's also about going out there, talking to people, making your hands dirty, and that's why I've been traveling quite extensively in the past few years with a focus on Latin America. I think Latin America is very, very interesting because there is a lot of experience there with financial crises. In the past few decades, they've had any imaginable crisis under the sun, and so there's a lot of experience on the individual level for savers and investors about how to respond to this. At least that's what I figured before I went. And lo and behold, that's how it happened that in the summer of 2011, I was in Buenos Aires, and my friends there, they couldn't stop talking to me about this currency called Bitcoin. And I became infected. I had to do the research, and in January 2012, I added Bitcoin to our recommended currency basket. It was $5 at the time, so obviously we did very well. But I'm here today, and I'm here to talk about why Bitcoin is a solid investment, why it's a great value proposition, even today with prices of around $120. So I'm going to outline the talk just a little bit. First, I'm going to answer two of the biggest myths, I believe, objections against Bitcoin from the investor perspective. Then I'm going to talk a little bit about the general the economic context we're living in, because I don't think you can evaluate the risks of Bitcoin without looking at everything else that's going on. And then finally, I'm going to give my thoughts about what we can expect perhaps for Bitcoin in the future, price-wise, what kind of prices we might see in the future. So, to get started, the big bubble argument. Is Bitcoin a bubble? A lot of people have come to learn about Bitcoin only in the past 6 months, and what they've seen is a gigantic run-up in the price, and then a big crash, a big panic, and then you see these kind of analogies you see up there. Is Bitcoin like the dot-com bubble? Is it over? The Nasdaq hasn't recovered yet from the levels of 2000, so are we going to see the same in Bitcoin? It's interesting to ask this question to people that have been around a bit longer in the Bitcoin world, and without exception, they're incredibly underwhelmed by these kind of things. People really shrug when they look at this and hear the objections, because they've seen a bubble already in 2010. Look at that. A big run-up and a big crash. Another bubble in 2011. It went up 1,000% from $1 to $30 and then crashed down to $2. And then, of course, the most recent one in 2013. So obviously there is something wrong with this idea of that Bitcoin would be some kind of traditional bubble. Let's first define our terms. What are we talking about? What is a bubble in economic terms? A bubble is defined as trade in high volumes at prices that are considerably at variance with intrinsic values. And what is being referred to here, the intrinsic values, is usually some kind of ratio, for example, the PE ratio in the stock market, and then you can look back at the historical mean and see if you are deviating from that, and then you can say, well, we are in bubble territory, such as was the case with the Nasdaq in the early 2000s. However, I think it's much more fruitful because Bitcoin is not a stock. It's not a stock. It doesn't have profit projections and all these kind of things. It doesn't have the customer base that needs to bring in revenue, etc., etc. In the first place, I believe we're talking about a technology. We're talking about an innovation. Cryptocurrency is a technology. And what do we know about technologies that have mass appeal? We know that they tend to follow an S-shaped adoption curve. Here are some famous technologies: the radio, the color television, the cell phone. We can say the same for the internet. So every time again we see an S-shaped adoption curve. For example, here with voice over IP, I used Skype as a proxy for that. So the beginning of that is a parabolic rise in the user base. And in Bitcoin, we see very similar things. For example, I used here My Wallet as a proxy for the user growth in Bitcoin. My Wallet is an application that allows people to manage their Bitcoins online. And so with this in mind, there's a couple of things we know now. We can make a very simple logic reasoning. We know, for one, the Bitcoin supply is limited. We know, two, the user base right now is growing at an exponential rate. And the third thing we know is that in order to adopt Bitcoin as a technology individually, what do you do? The same thing as what you did when you bought your first radio or television. You just buy it. You buy Bitcoin. So putting those three together, this parabolic rise in price that we're seeing over time shouldn't really surprise us. And that's why I think, rather than seeing the price in this fashion, which tends to scare investors horribly, they don't want to touch this thing with a 10-foot pole if they see something like this, you can look at the very same price in a different way. This is the same price, but in a logarithmic scale, and then you see a very orderly increase in price, and so just the reflection of a parabolic adoption curve. So that's why I'm not worried at all about the argument that it's a bubble. This is a false argument, I would argue. And then the second myth is the volatility, that I believe that this is a myth, that the volatility will never go away, for example, and it will forever be an insurmountable problem for Bitcoin to be ever generally accepted. There's three general reasons, and let's go over them and then see whether we can expect change for the volatility in the future. First reason, I think, is the fact that there's speculators. We're in a small market still, so and it's rising, so that attracts a lot of speculative capital. People are hungry, are greedy. They jump in, they use leverage, and then they tend to panic and sell. So that's why we have these gyrations in price. That's one reason. A second reason is the bottleneck effects we're seeing. These are the growing pains of Bitcoin. We see exchanges that were not prepared for a surge in interest. All of a sudden, there's a lot of volume that they were not prepared for. In 2011, there were attacks that they were not prepared for, and that caused some of the exchanges to be hacked. Today, it was more the high-frequency trading that was a problem. And so it's important to take a look at this, because from an investor perspective, you kind of want to know that if you move into the asset class, there is kind of, well, will there be an exit? Can I in the future diversify away from Bitcoin? Should I want to? I think there's a couple of solutions to this problem of the bottlenecks with the exchanges, I mean. First of all, trial and error. That's something we're seeing happening already. There's a lot of exchanges that have closed their business, and right here at the conference, we see a lot of new initiatives getting started, people that want to learn from the mistakes of the past. There is people are also looking, the exchange entrepreneurs are looking outside of their own jurisdictions these days. Also, we're looking at offshore solutions. Sometimes we see efforts towards decentralization. I'm thinking of Buttercoin, for example, and Ripple, OpenCoin, those kind of initiatives. And then finally, and I think this is the most important long-term trend, is that the Bitcoin economy as a whole is growing. And we are seeing the budding start, the embryonic start of a financial system in itself. And what does that mean? It means for the investor that it's very likely that in the future you'll be able to sell your Bitcoins directly in return for the other asset class you're interested in. You will be able to buy commodities with Bitcoin, buy futures with Bitcoin, shares with Bitcoin. And so this idea that we always need to go back to fiat first and then back to Bitcoin, I think over time that will become less of a pressing problem. Actually, the European Central Bank kind of confirms this in their report, Virtual Currency Schemes of October 2012, which was mainly about Bitcoin. I think they mentioned Bitcoin about 150 times in this report. And when they say that it cannot be ruled out that non-banks, and with this they mean Bitcoin-related, Bitcoin-based financial companies, so it cannot be ruled out that non-banks will develop more independent strategies and will no longer need to ally themselves with banks. That's quite interesting, I think. And then finally, for the volatility, I think it's important to realize that Bitcoin is a commodity, and it's a very, very new commodity. And we've seen throughout history, not very many, but sometimes it happened that there was a new commodity to come to the market. For example, petroleum. Petroleum was discovered in the 19th century, around 1850 in the United States, a little bit later. And so we have a lot of data available on what happened with petroleum prices in those early days. And this is one of those examples. This is the oil price from 1860 all the way through to 1960. And you want to look at the yellow graph because that's the inflation-adjusted price. And what you see is incredible volatility in the oil price. Incredible volatility. And this doesn't even show the whole picture because this is on a yearly basis. We're not even seeing the monthly and daily gyrations. And also what we're not seeing here is that the petroleum price in the early days was not uniform at all. There were very different prices within the United States depending on where you lived and where you went. And this, of course, reminds us of Bitcoin today. There is very different prices in the exchanges at times. So I think over time, Bitcoin prices will evolve just like these prices have evolved. They tend to stabilize. There's all kinds of mechanisms that develop to help with that. But I don't think we will see a downward stabilization because, of course, the oil supply, it skyrocketed for the first 100 years. We saw a yearly rise, an increase in oil production, which explains the drop in price over time. Of course, Bitcoin has a limited supply. The supply will tend to decline over the years, and that's why I think we will see stabilization, but rather at higher levels. And I really like this slide because it's a good way to step over into the next thing I want to talk about, which is the comparison with the current system, the current financial system. Bitcoin is a new system. It's a new way of doing things. It can be in the future operate completely independently. So in that sense, it's really David that's kind of defeating or challenging Goliath. So let's take a look at the old system. What do we know about money supply, for example? This is the US dollar money supply. It's one of the more conservative estimates. It's the Austrian true money supply. And we see a parabolic uptrend. Why is that? Because the United States government left the gold standard in 1971. The dollar is no longer pegged to anything, and that allows governments, central banks to print as much as they desire, and so they do. Also, governments are able to sell debt to central banks. This is what you see here. There's the balance sheets of a couple of central banks, the most important central banks added up together. We see also that this debt is rising exponentially. If you look at it from the other side, what you see is a gigantic bond bubble. The estimated public debt in the world today, this is numbers from 2011. If you look at the latest numbers, we're talking about $50 trillion worth of public debt in the world. It is more or less tripling every 10 years now. So this is, of course, completely unsustainable. But the question is there a tipping point? When is going to be the time that we change from insolvency and we make the change towards bankruptcy? When is that going to happen? Well, talk about unsustainability. There are some interesting voices coming from the developing world. For example, this one from Mexico. This is from a paper by Guillermo Ortiz, who is the governor of the Mexican Central Bank. He decided to compare debt levels in what you see on the right-hand side, debt levels in Southern Europe with those of, on the left-hand side, Latin America in the late 80s. and the late 80s was a horrible time for Latin America. There was complete meltdown in the economy because the debts were too high. So the average debt in those areas was around 82% debt to GDP. In 2009, this was more or less the average for Southern Europe. Today, we're already 4 years later. The debt levels are much, much higher. The average debt in Europe, in fact, has risen 50% since 2007. That's public debt, government debt. And so this seems to be completely unsustainable. These numbers are OECD numbers. So 2010, public debt in the 34 Western nations risen to 106% debt to GDP. Compare that, for example, to the Latin America I was talking about, or also the USSR, which had public debt of 75% debt to GDP when the ruble crisis occurred in 1998. So it seems that in many respects we are out of our debts. I just highlighted public debt here because it's easily understandable, but this just scratches the surface. I haven't even mentioned the 700 trillion derivatives bubble, 78% of which is based on interest rate movements. We're seeing historically low interest rates in the world. This is going to change, and so the derivatives bubble, no doubt, one day is going to blow up. We have terrible leverage in the banks. These banks are craving for new money every day. So these are just a few of the problems, and it seems like we are nearing some kind of resolution. But what is that going to be? Because as investors, we're pragmatic. We kind of want to know if we should worry about the next couple of months, about the next couple of years, or if it's further away. Because if it's further away, it might not affect our decision of today that much. Well, I think there is actually a sea change coming, and I think that Rubicon is something we're going to cross when financial policy turns from bail-out towards bail-in. Bail-out is something we're all familiar with. It's what started occurring in 2008. Basically, you save institutions, government, and mainly banks. You save them from the outside by pouring money in, and not really by making them healthy. You kind of turn them into zombie banks. That's what they did. You just barely give them enough so they can survive. So that was bailout. Today it's bail-in. We saw it in Cyprus. I'll explain in a moment what bail-in exactly means, but the question is, of course, is Cyprus the exception? Is it the exception? Is it just to say, oh, we don't want these Russian oligarchs on our European territory, so we're going to... of course, we know that all the oligarchs were already gone before the banks were closed, but that's another story. So is this an exception or not? I don't think it's an exception at all, actually. I think this is part of financial policy, because we have to understand that financial policy it's not decided on a national level. It's not the Minister of Finance that one day wakes up and say, oh, we're going to do this or that. It's not even the central bank. There is a hierarchy in this system. And if you climb the ladder, you come and meet these international institutions. You meet the IMF, which is the policing agency. They are the ones who implement the guidelines. And then you go higher up, you meet the Bank for International Settlements, which is both a think tank and an important, well, it's the central bank of the central banks. And then even higher, you meet the Financial Stability Board. It's very little known, but it's recognized by the G20 as having financial authority over its 60-member central banks. You can look it up. They have a website called financialstabilityboard.com. I recommend reading their latest papers. And so, talking about this bail-in, what we saw is that they published an important report in the summer of 2011, where they decided to change global financial policy. The title was Effective Resolution of Systemically Important Financial Institutions. And what were they proposing in that document? They proposed policy measures to resolve large banks without systemic disruption and without exposing the taxpayer to the risk of loss. Let's read this carefully. What are they talking about? They're talking about resolving large banks. To resolve a bank, it doesn't mean to bail them out. It means to have an orderly bankruptcy. It's really something else than bailing out a bank. An orderly bankruptcy, and they don't want systemic disruption. So they don't want that other banks are affected by this. They don't want that other governments are affected by this. And they want to do this without using tax money. So this seems like quite challenging what they're trying to do there. So let's be a bit more specific. In the same documents, we read that what is proposed is essential elements of a bail-in regime to enable creditor-financed recapitalization of financial institutions. So the bail-in regime, I'm going to explain that in a moment. Let's do it now, in fact. What it means is that we are not going to save the bank from the outside. We're going to look from the inside, and we can't change anything about the asset side of the balance sheet. We can make some changes on the liability side. Let's see what kind of obligations the bank has to pay institutions on the outside. So who are the creditors to the bank? There are governments that have borrowed money to the bank. There are other banks that have borrowed money to the bank. And then, of course, there are the savers, the individuals who have borrowed money to the bank. And you might think, I haven't borrowed money to the bank, but of course, deposits are considered to be credit to the bank. This is already since the 19th century. It's part of the legal tradition in the West that you are a creditor to the bank if you have a saving account with it, even just a side account. So we're going to use people's saving. Let's turn this into everyday reality. It means basically this: you wake up one morning, you open up your bank account on your computer, and what you see all of a sudden is like this gentleman who had a business in Cyprus and who had a bank account with Laiki Bank. He saw all of a sudden that 85% of his assets were frozen, no longer accessible. Basically what this gentleman experienced was the same as what the Argentines experienced with the Corralito in 2001. This is a bank holiday in the works. This is today. This is European Union. This is the breach of the promise to guarantee people's deposits. So back to that document of 2011, they made a lot of policy guidelines. Of course, these had to be implemented. The expectation was that by December 2012, all these guidelines had to be implemented, the bail-in regimes. We're past that date now. They Financial Stability Board launched or published an evaluation to assess how many nations have actually accepted this as legislation. And based on that, I made this little map that shows us the places in the world where today either bail-in resolution is already enacted into law or is in the process of being enacted into law. And just to close, again, to validate my point, the one that I said before, that we have this hierarchy in the financial system. First, we saw that in the big, by the way, to explain this graph, what I did is a Google search on the various websites, IMF.org, BIS.org, and FinancialStabilityBoard.org for the word bail-in. And then I mapped it out, and what you see is that the IMF started thinking about it the first. This is the big think tank. Then the idea trickled up towards the financial government, which published their report in 2011. And what we see happen now is that the IMF, the policing agency, is now in the works of enforcing this throughout the world. This is, of course, just my theory. It is what concerns me. It is the reason why I think that we should be more worried than a lot of newspapers, a lot of other publications will want to make us believe. And that's why I think the risks we are facing today are bank holidays. The risk we're facing are capital controls. We can see bond crashes happen and devaluations in a lot of countries. So this is not a very happy story, is it? However, I think there is a silver lining, because wherever there is a risk for a big meltdown in the economy, there is an equally great opportunity for a melt up in certain asset classes. Because the wealth in the world, the assets in the world don't just disappear. What usually tends to happen is a transfer of wealth. And which are the assets that might benefit from such a meltdown? They tend to be assets that are very, very liquid, because people know that there's uncertainty. They want to have flexibility. And it's also assets that don't have third-party risks, like bonds, for example, or derivatives, or fiat money even has third-party risk. And combining those two characteristics are what we know as hard money: gold, silver, and specifically Bitcoin as well. So that's the silver lining. And I think there is some empirical evidence already that Bitcoin is serving as a safe haven for investors, for savers, people that are worried around the world. Here is, for example, Spain. This is the amount of people that were interested in buying and selling Bitcoin on a local level just before the bank runs in Cyprus. And the next image I'm going to show you is the very same map, but 60 days later, right after the bank runs in Cyprus. Oh, blue and red. The blue ones are the people that want to buy Bitcoins. The red ones are the people that are interested in selling some Bitcoins. This doesn't even show the whole picture. Actually, if you zoom in Madrid, for example, you see that all these little flags are stacked up behind each other. Also, my personal experience in Argentina really validates my idea that Bitcoin is actually a safe haven instrument. There are a lot of people mining Bitcoins in Argentina. People are soliciting to being paid in Bitcoins. My friends are now ordering their organic vegetables in Bitcoin in Buenos Aires. Actually, the graphics of this presentation, which I don't know if you agree, but I think are wonderful, are made by an Argentine friend of mine, and of course I paid him in Bitcoin. So yes, Argentina shows us how Bitcoin can shine in very, very harsh circumstances, because capital controls in Argentina are some of the harshest in the world right now. It's extremely hard to move money in and out of the country. It's of course, saving is completely dissuaded because the inflation is very high. And if my idea is that if the world tomorrow looks more like Argentina, again, Bitcoin will show its worth. It will show that it's an anti-fragile asset. It will show that it is incredibly flexible and will allow for people to continue to save despite the destruction of a lot of wealth in the world. So having said all this, let's take a look at possible future valuations of Bitcoin. I wanted to give make this preparation towards this point, because some of the projections I'm going to give might seem quite outlandish if I would just give them at face value. The context, I believe, is this. We have the S-shaped adoption curve, and what you see below that is the kind of the demographic profile that's generally connected with the different phases of the S-shaped adoption curve. So first we have the innovators, the innovator stage. Perhaps this is where we were in 2011 in London, when there was 150 attendance and there were no high-profile, not many high-profile people attending. Today that's very different. We have a lot of opinion leaders that are extremely interested in it. I believe there's quite a number of them present right here. They have a lot of knowledge, they have capital to back it up, and they're going to make Bitcoin big and boring so that the majority can start accepting it. So that's why I think we are right there. We have a long way to go in the growth of Bitcoin. And let's now take a look at some possible future valuations. Global hedge funds, for example, they have around $2.3 trillion under management, a part of which is cash. So we can imagine they might diversify just 1% into Bitcoin. Should that happen, according to my calculations, the Bitcoin price should rise to over $1,000 for one Bitcoin. Argentina, there's about $50 billion worth of paper money circulating, and I do mean dollars, so greenbacks circulating in Argentina. Should the Argentines one day decide, or maybe over time decide, to switch that into Bitcoin, Bitcoin prices will rise to over $2,000 per Bitcoin. Gold bugs. Gold is money, but Bitcoin is money too, and it has some interesting characteristics. So maybe in the future, people that own gold today might want to divest just 1% into Bitcoin, in which case we can see prices rise to over $3,500 for a Bitcoin. And then if we've arrived there, I mean, why wouldn't it just keep continuing? I don't see why not, because the more people get involved, the stronger the network becomes, the more entrepreneurs that are there to make things very easy so that even grandmothers can start using it, etc. So let's continue our possible projections. We know that the global shadow economy, for example, has a size of around $15 trillion. This is 2012. If we assume that the volume of Bitcoin today would rise to something equal to that of the shadow economy, so basically the black market would become a Bitcoin-based or a cryptocurrency-based black market. And if I assume then that the Bitcoin price would rise equally so, which we can talk about whether that's a good idea, then Bitcoin prices would rise to around $160,000 for a Bitcoin. Should Bitcoin actually become the new gold? People talk about Bitcoin like gold 2.0, the new gold. They actually use that phrase quite loosely these days. If this really is the case, we know that there's around 155,000 tons of above ground gold. These are the most conservative estimates I could find, the James Turk estimates, and multiply that with the gold price. Total valuation is around $7.2 trillion. So if Bitcoin really does become the new gold, one Bitcoin should be worth around $340,000. I mean, imagine the implication. You own 3 Bitcoins today, and that makes you a millionaire tomorrow. You own 3,000 Bitcoins and you're on your way to become a billionaire. I mean, so you can see the kind of risk-reward ratio we are talking about. And then finally, I mean, you know, Bitcoin is the new gold. The black market is using Bitcoin. Why wouldn't Bitcoin become the new world reserve currency? And then based on, again, the most conservative numbers I could find, what I come up with is a Bitcoin price a little over $500,000 for one Bitcoin. So very exciting indeed. Again, that's why I think the risk-reward ratio of Bitcoin is extraordinary. Everybody should own just a few Bitcoins, even if it's just a tiny percentage of what you own. My subscribers, the ones that invested just 1% of their assets in Bitcoin, they're now between 20-25% in Bitcoin with hardly any risk. So because I advise them to actually sell off what they put in, making the risk, turning the risk into zero. So that's talking about Bitcoin alone. I just want to mention that cryptocurrency, this technology we are talking about, is more than just Bitcoin alone. There is still 10 million Bitcoins that are unmined. They have a value today of more than $1 billion. If the Bitcoin price keeps rising, this will become a multi-billion dollar industry. So to look at Bitcoin mining, I think, is not only interesting, but can be very profitable. Of course, you have to be careful about which decisions you make. There is Bitcoin-denominated stock markets. This is still very early stage. However, there's a few companies that have market caps of over $20 million today. And they've grown from very, very small sizes. It's incredibly exciting, these Bitcoin-denominated stock markets, because you get paid, for example, you get paid dividends in Bitcoin. Isn't that nice? You know, and some of the stocks I own, they have dividend yields of 20-30% annualized. So I don't mind about that. That's very promising, I think, in the future. Also, bond markets, these are really embryonal. It's very, very early on because the Bitcoin price is rising fast, and also because globally interest rates are very low. I think this will change. Interest rates are just too low. This will change. And once credit markets globally start drying up, I think there'll be a flourishing Bitcoin bond market. So we can look into that. And then finally, there's the alternative cryptocurrencies, Litecoin, Namecoin, Teracoin, those currencies. They're still very small today, but maybe tomorrow there'll be some brilliant developers that start really building upon them. And in the long run, I really think that the market share of these currencies can grow. Now I think we're looking at between 3 and 5% compared to Bitcoin. I think over time this might rise to maybe 10%. Why? Because we have network effects in Bitcoin, making it that makes it logical that it should be the most dominant one in the future. However, as with Facebook and all the other social networks, we see that there's always a demand from a certain niche in the population that just wants something different. And that's maybe part of the reason why Litecoin in the past 3 months rose 1,500% versus Bitcoin. Few people know this, but it was a very interesting place to be. I write about these things very often, about Bitcoin in general, Bitcoin as investment. If you're interested to know a bit more details, I'm working on a report about this. I'm happy to send it to you. Just surf to my website and or send me an email at tuurdemeester.com. I'll be happy to send it to you. And that's it. I'm happy to hear if there are any questions. Yeah, please, because then it's recorded as well.
Hi, Tuur. You said that you've got macro trends, your newsletter. Is the demographic of your subscribers changing because of your Bitcoin coverage?
That's interesting. I think that's the case, because certain people certain people are quite attached to the investment choices they've been making in the past. We've seen this in the gold community, for example. A lot of the gold community acts a little bit like rabbit in headlights. A friend of mine who was a big silver bug, she said the feeling of what happened to Bitcoin in the last few months, for her, it was like just this bullet whizzing by, and she was waiting for the big, price explosion in silver, and like, where did this come out of? So yeah, I do think also the demographic of Bitcoin is much younger. Average age of what I could find is around 34. Maybe this is changing now. And so there is a technological gap. There's also the jump from, the idea that if you can't hold it, you don't own it, towards this very challenging notion of Bitcoin. So yeah, I do think it is changing.
Thanks, that was a great talk, really enjoyed it. I wanted to ask you, in your critique early on about fiat currencies and why Bitcoin makes sense in today's context, you talked about a lack of liquidity and a lack of interchangeability of money, of ability to get into the currency and get out of the currency. And I'm in the back thinking, well, that sounds a little like Bitcoin itself too. Today, if you take some of Gox's challenges and the lack of liquidity in other exchanges, there's also the average person has difficulty buying and holding Bitcoin itself. So I wonder if you could comment on that, and how do you see that evolving over time? And do you think that's a challenge to the adoption of Bitcoin long term?
You mean the lack of liquidity, for example?
Well, the lack of interchangeability, the ability to buy Bitcoin for the average person that doesn't have the knowledge of how to do that.
Well, I think it all depends a little bit on the short run. It depends on how governments will decide to what they'll decide to do with Bitcoin. It's challenging. I mean, my friends in Argentina, it was challenging for them to get Bitcoin, for example. So what you see more and more is that young people are soliciting to work for Bitcoins and to be paid in Bitcoin, for example, to offer products or services. Lack of liquidity, interchangeability. Again, I think what we have is a market at play. I can't think for the million entrepreneurs that are going to find solutions for that. But capital controls don't stop people from wanting to change their bad money into good money. So the market will provide a solution for that. I don't really have concrete answers, if that's an answer to you.
Yeah, no, that's helpful. I guess I'm wondering, does that have to change in the short term for this to work, or do you think there'll just be so much pressure for it to change that over time?
You mean like, do we need more solutions today? I think, for example,
do we need more liquid exchanges?
Yeah, and I think there's interesting initiatives. There's people talking about liquidity pools, actually Bitcoin to Bitcoin loans between the exchanges. This would create a lot more liquidity. That's a part of how banks work today. I think that's interesting. There's some risk involved maybe, but I think it's really interesting looking forward. And of course, the more fiat money that flows into Bitcoin, the more liquid things become. There's a lot of businesses, for example, today that are hesitating to get into Bitcoin because they know that if they would they would push up the price or down to their own detriment.
Thanks a lot.
Hi, I'm Gabriele from Italy. Two consideration. I would like to let you know that you can buy from me at $100,000 Bitcoin, my Bitcoin, and it's a game. No, that's just a joke. I was.
You don't sell your Bitcoins, right?
I'm not going to sell. I'm going to hoard and to hold. But as me, probably if we are here, we are going to save as much as we can our Bitcoins. And I was intention to buy some cakes in San Francisco for Bitcoin, but now I really decided if to spend my Bitcoin for cakes. So, what is your opinion on the old issue of hoarding instead of spending?
Oh yes, I think that's a very important issue: hoarding versus spending. A lot of people today, and I mentioned it yesterday also in the panel. A lot of people today. By the way, I think we have room for just one more question because then we really have to respect these gentlemen's. hoarding versus spending, I think this is a grave misconception. I mean, economic growth doesn't come from spending, it comes from saving in the first place. If you want to start a business, any business, want to build a factory, want to have workers developing a product, they need time, they need resources before there's even talk about profit. So you need savings in order to finance that. And if we save in Bitcoin today, we can help fund future projects, either as investors or as entrepreneurs ourselves. I think it's actually a very damaging notion that we should spend our Bitcoins, and eventually this will happen, and that's of course great. People buying and selling things in Bitcoin, but I think for the moment we also have to worry about this transfer of wealth, and if we don't buy Bitcoins, somebody else is going to have the purchasing power that we lose. So that's my answer. Just final question?
Well, I'm from Argentina, so I really don't hope that every country goes towards what Argentina is doing. Please don't use it even as an example. No, my only reflection is that it's very difficult in Argentina to get the money out. Obviously, Bitcoin helps to do so, but people is not going into Bitcoins because of it. I mean, I'm one of the Argentinians that promote Bitcoin. And one of the main questions we always get from press is, oh, this is a great way for taking money outside. And I can say that most of the guys that are in Bitcoins right now do it because they believe in the value of Bitcoin, not as a way of moving the money outside the country.
Right.
Even though it's
I think
possible.
it's true
so
that
that's very interesting in Argentina. Everybody thinks that it's for moving it out, but what's happening is that lots of people are believing in Bitcoins because they know what happened before. They know how much they lost when the Corralito came. The dollars are not theirs, and so really it's
So you are spending all your Bitcoins?
Spending my Bitcoins.
No, but I mean, I think it's both. I think what I see is both. Is yes, there are people that are using it to buy and sell, and the same as in the U.S. But there's definitely people that I mean, really, if I went to the Bitcoin meetup in Buenos Aires, there were almost 100 people there. People were giving me business cards because they wanted to work for Bitcoins, and so I guess it's both. I would agree with you on that, right? Thanks very much. I'll leave it to the Bitcoin Fund now.